Hi there, it's Victor here. Hello, ladies and gentlemen, boys and girls. Welcome to another edition on how to grow your wealth. Today I'm going to be talking about stock exchange for beginners. Yes, I mean stock investment for beginners. More practically in the entry level. But if you are intermediate level or even advanced level in the stock market, then this might be some sort of a refresher or a checklist. One of the comments I received on one of my previous content was that, Victor, you mentioned about the stock market. Why don't you elaborate? So that intrigued me today to come up with, stock exchange for beginners. The stock market is a very profitable, very profitable investment venture. And one of the reasons is because it has a very low startup cost. You can get into the stock market with $5, $10, or even $20. Plus, it's a very liquid venture, which means you can sell your stocks anytime. You can buy today and even sell the next day. So it doesn't have to stock in you just like real estate will do. One of the greatest pioneers in the stock market, Warren Buffett, said, and I quote, "The stock market is a device for transferring money from the inpatient to the patient." Now, what does that mean? We all know the stock market is very volatile. It fluctuates like a sine wave. It goes up and it comes down. Most of the time, people who are inpatient, when it goes down, they kind of freak out and they sell. While the people who are patient wait until it comes back up, and that's when they sell. You see, when it comes to investment, knowledge is power. And also check out for the fees, because fees do matter. And with stock in particular, the principles are that you buy low and sell high. Try to minimize your risk and maximize your profit. So to fully understand this concept, what I will do is that I'm going to respond. I will be answering the most frequently asked question in the stock market or in the stock exchange venture. And those questions are: what are stocks? What are the types of stocks? Why do people buy stocks? Why do companies sell stocks? How do the brokers make money? What are the strategies? How do you buy and sell? The trading strategies. How to decide which stock to buy? How much money you can start investing? How are taxes? When you invest in the stock market, there is always capital gain sometimes when you receive dividends. So how are they taxed? We'll also talk about how they are taxed. Most important, how do you learn about the stock market? Because the irony is that little or nothing is being taught in schools, not even in an MBA. There are no courses. There are no courses for the stock market. But how do people normally learn about this? By attending seminars and reading books. Just as I said, when it comes to investment, knowledge is power. So you have to read books. There are books out there. I'm going to suggest a couple of best-selling books. I'll leave the link below in the description. If you're interested, just click on it and you can try to build your knowledge slowly and gradually to get into the stock market. But as I said, it's a very good venture. It's something that you can easily get in, but you just have to understand how it works. Most people go into the stock market without really comprehending. Like, people are having mutual fund. They don't even know about commission fee or management fee or the expense ratio. I talked to one of my friends who have had mutual fund for 10 years. I'm like, what's your commission fee? It's like, what are you talking about? He says the bank manages it. I said, yeah, I know it's an actively managed fund, mutual fund, but do you know how much they charge you? And he didn't know. The surprising thing is that, the bank, I have friends who are financial planner, managers in the bank. They are all good people, but I think it would be ethical for them to tell people how much they are charging them to trade in the market, to buy and sell stock, how much they are being charged. So that's what we're gonna talk today, and let's get started. And if it's your first time here, welcome. Please subscribe and press the bell button to be notified anytime I upload a new video. Okay, so now we have to go through all the questions regarding stock market for beginners. Question number 1 is, what are stocks? Well, stocks are simply part ownership of a company. Let's say you have a company called XY, Company XY. Company XY is now broken down into small pieces. Say you break it down into 4 pieces. If I buy 1 piece, my friend John buy 1 piece, Suzanne buy 1 piece, Peter buy 1 piece, we become part owners of that company. So what does that mean? That means that we become eligible to vote for the board of directors of that company, and we're also eligible to receive dividends if it's a dividends paying stock. So you see, we own a little piece of that company just by buying the share. When you break it down, those small pieces are called shares. You buy a share, another person buys the share, they become part owner of that company. The second question is, what are the different types of stocks? Well, principally there are 2 types of stocks. There's preferred stocks and common stock. Preferred stocks are for employee-owned companies. You see, some companies are partially owned by the employees. What happens is that the company, they sell shares to their employee. The employee can keep those shares till when they are retiring, they sell it back to the company. It's kind of mandatory. You cannot sell it out. You have to sell it back to the company. It's kind of a pension plan. So they hold it until they sell it back to the company. That's preferred share. Now we have common shares. Common shares are the regular shares that we hear on the radio. We watch it on the TV. In the news, the S&P 500, the Russell 2000, those are all common stocks which are traded in the stock market. So from this point going forward, we will be dealing only with common stocks. So common stocks is divided into 2 main types. There is individual stock, which is pretty straightforward. You can get a Coca-Cola or Pepsi-Cola single stock. Those are individual stock. And then we have a diversified portfolio. Diversified portfolio simply means similar stock inside of a basket within the same industry. Let's say you go to the tech industry, you have like Apple, Google, Facebook, they are all in a particular basket. So that's what we call diversified portfolio. And diversified portfolio now is breaking down into 2. It's breaking down into mutual fund that we all know about and exchange traded funds. Which exchange traded fund is high frequency traders. Those are for day traders. We'll talk about day traders soon. Then mutual fund is now breaking down into 2. Mutual fund is breaking down into actively managed mutual fund and passively managed mutual fund, which we call it index fund. So the active part is that a manager in a bank or a fund manager manages in return of a commission or a management fee. Commission fee can range from, right now it's like 2%. While on the other hand, I talk about passive, which is index fund. Index fund simply track an underlying market. So it tracks a market. It's like a robo-advisory. Nobody manages it. That's why it has little or no commission fee. So anytime you want to try to get into stock market, if you are going to mutual fund, make sure you don't go to the actively managed mutual fund. Try to go on the index one because nobody beats the market. That's what people normally say. So it follows a market. Nobody will manage it for you, but you'll be making your money. Most of the time, as I mentioned before in investment, those fees do matter. They take a lot of your money. I had friends who have closed down mutual fund because they didn't realize they were paying all those commission fee, which was going to the financial institution, and they were pretty much making nothing. So knowledge again is power when it comes to investing. So the next question was, why do companies sell stocks? It's pretty straightforward. Companies sell stocks just to raise capital. Company XY might decide to expand. So for them to expand, they have to raise money. And how do they raise money? They break the company into 4 shares, sell it out, people buy it. They now get the capital to expand. They might build new location, downtown or East End. Now they will have different inventory just because they needed money. So that's why company sells shares. So why do people Buy shares. It's pretty obvious. People buy shares because they want to make money. There are two ways to make money in the stock market. When you buy a stock, let's say you buy a stock for 100 and you hold it for a year or two, it now climbs up to 500. So you see there's appreciation like equity. Similarly to real estate. So you buy 100, now it's 500. What is the difference? 400. So if you decide to sell after 5 years, you get a $400 gain. So that's considered as capital gain. So you make money from capital gain, and you also make money from dividends, which are profit. There are some companies that pays back their shareholders for the loyalty and the trust for sticking with them. So they will also pay you dividends. So two ways of making money: capital gain and dividends. Let's move on to the next question. Where do people buy stocks? Well, there are two places where people buy stock. Your traditional banks. So any bank, if you're in the US, Bank of America, if you're in Canada, Royal Bank of Canada, or RBC or Bank of Montreal, you can buy it there, and you can also buy it from brokers. There are brokers which have offices where you can walk in like any financial institution and one-on-one, like Vanguard, Fidelity, Charles Schwab. You also have brokers which are online. Online brokers are E-Trade, Ali. You also have some brokers which are apps, just like you have your WhatsApp apps or Instagram. It's application only. This is Robinhood, Wealthfront, Betterman. And what happened is that while I was doing my research and doing some reading, those brokers that have offices, it makes sense for them to charge you a little bit of commission fee to manage your money, trade in, trade out. But I realized that the brokers that are apps or online only, which doesn't have an office, they have very less commission fee. As a matter of fact, Robinhood app doesn't even charge any commission fee. So anyone who is going to the stock market as a beginner, that's already a tip. If you want to start investing, especially when you are investing something low, less than $1,000, go with Robinhood. Robinhood will not charge you to sell and buy. There will be no round trip trade. You know, anytime you sell in the stock market, when you sell and buy, you pay to sell and you also pay to buy. So watch out for Robinhood and Wealthfront. Those are the ones with little or no commission. So now let's go to the next question. How do the brokers make money? That's a very good question. How do the brokers make money? Well, different brokers have different philosophy. Some might charge you per share anytime you do a transaction, or they might charge you per trade. It all depends what type of trading you are. You a day trader or a swing trader? It all depends. But bottom line is there is commission or management fee, sometimes known as expense ratio. So when you get into that, it's advisable you check with your financial institution or the brokers. They should tell you upfront what's your commission fee, how much you're gonna charge them. Okay, let's go to the next question. What are the stock strategies? What are the selling and buying? They call it trading. Well, there are three main ways to trade in the stock market. One of them is, the first one is the day trading. Day trading is a high frequency trading. These are for people who are expert in trading. They go in the market and comes out within a couple of seconds. It's like a kingfisher. You go in the water and you come out with a fish. They know every company's report in their palm. They have the investment report, financial report of Walmart, Home Depot. They have all those information. They know the metric. They know which companies are profitable. So what they look is, they check if a company is acquiring more product. They know something is happening. They might just sell and buy. So for a beginner, day trading, I don't think it's something for you. Those are for people who are experienced. The next selling strategy is swing trade or short term. Yeah, these are people who also do some research. They are knowledgeable about the company. They might buy and hold for 6 months before selling, or hold for 5 months, depending on how things work. Sometimes they watch TV and they see on Bloomberg that, oh, this company is going to bring another product. Just like Apple. Apple every time comes with iPhone 6, 7, 8. Anytime a new iPhone is coming, the share of Apple goes way up. So they hold it, they sell after 6 months and make their money. So that's for short term. The number 3 trading method is long-term, or what we call hold trading. Hold trading is for people who buy and hold it for a long time. Some people are experienced in the trade market, some are not, especially mutual funds. Sometimes people just buy it and hold it for 3, 5, or even 10 years. They just know, okay, I'll keep the money there and see how it goes. So there are 3 ways that they are trading: day trading, swing trading, and hold or long-term trading. So those are the ways you trade. So how to decide which stock to buy? That's another good question. The way you decide a stock to buy is you have to do some research. You have to read books. You have to be knowledgeable. Any company that you want to be interested in their stock, you can go on their website and just type in investment relation or investment report. Their investment report, normally it's like a financial report. When it comes out, it will tell you if the company is profitable or not. You will see like their net worth. You will see, do they have a lot of assets? Do they have liabilities which might cost you? So those are the things. You can go into their website and check that. Or you can also go on this. Also on the internet, you can go to Yahoo Finance is very good. Yahoo Finance give report of every company, what's their growth. You also have Google Finance also does that. You can also check that and find out. And worst case scenario, call the company up. If you are interested in buying shares of a company, they should be happy that you want to become a shareholder. So question number 9 is how much money to start investing? Well, you can start low, you can start medium, or you can start high. Just like I mentioned, there are stocks selling, shares selling below $50, stocks selling below $100. But it's advisable if you're a beginner in the stock market to start low. When I say low, on the lower $1,000, so $1,000 and less. And what you do is you do what is called dollar cost averaging. So instead of taking all the lump sum and putting it to buy shares, you can use your checking account and just remitting $100 every month. In that case, it suppresses if there is any commission fee. Just like I mentioned, the average commission fee is like $2. Sorry, it's 2%. Let's say you are investing $10,000 and there's a 2% commission fee. What's that? 2% annual commission fee will be $200. If you put all the $10,000, you will have like a commission of $200 a year. However, if you start putting $1,000 every month, 2% of $1,000 is what? $20. So you see, just because you remit every month with dollar cost averaging, you save some money instead of putting all the lump sum. So that's the way. Advisable to start low if you're a beginner in the stock market. So let's go to question number 10. How are stock return or stock gain taxed? Well, the way the stock gain is taxed, it all depends on how long you hold your share or you hold your gain. Yeah, for example, let's say you have a stock or a share which is dividend paying. So every quarterly or semi-annually you are receiving dividend. If you hold that dividend for more than a year, it moves it to a different tax bracket. But less than a year, let's say you have capital gain or some returns from your stock. If you decide to cash out less than a year, you are being taxed as a regular employee income tax, which is between 20 to 30%. However, if you try to cash out after a year, it now moves into the investor's bracket, which brings it down. So in that case, you are taxed from 10 to 15%. So it all depends on how long you hold it That's how you get taxed. Okay, so let's move to question number 11. Where to learn about stocks? That's a very brilliant question. Nice question. You see, just like I mentioned before, when it comes to investment, knowledge is power. You have to use your brain, because the stock market is a smart game, very smart game. It's not like a jackpot where you go to a casino and put money and pull and coins start falling down. You have to be smart. You have to know the market. You have to follow the investor's report. You have to know the PC ratio, which is the time to buy. You have to know the price to book ratio, which is how to evaluate a company. What's their net assets? You see, so there are certain best-selling books in the stock investing. And some of the books, I'm going to leave the link down below. If you're interested, you might check them. The first one is Intelligent Investor by Benjamin Graham. This was the book that Warren Buffett himself read, and he recommended and endorsed that book. Then you have Little Common Sense of Investing by John Bogle. As you know, John Bogle is the founder of Vanguard. Vanguard is one of the biggest brokers in the world. Then we have Rich Dad Poor Dad by Robert Kiyosaki. Very intelligent book. I've read that book over 5 times. Then we have Money Master the Game by Tony Robbins. Tony Robbins is not really in the financial. He's like a motivation speaker, but he interviewed one of the best investors in the world, and then he comes up with an essay of intelligence. And then we also have Warren Buffett himself. He wrote a book called Snowball. That's a book you have to read if you want to get into stock exchange, or if you want to get into investing as a whole. You need to have a copy of those books. So I have the link again down below in the description. Just click on it. You can get a copy, and that should try to power you up or bring you up to the level of investing where you can be comfortable that when you invest, you'll be seeing some profit. Again, the stock exchange is very profitable. Little or none is taught about it in school, not even in the university. I haven't seen any course in the stock market. So now let's go to the final question, which everyone also wants to know. If in case, since I'm in the stock market, what are the risks? What are the risks in the stock market? Yeah, so the stock market, like any other investment venture, comes with risk. I think there are 2 risks that I might want to talk about. The first one, it's not really a risk. Some people say it might be a risk. It's default payment in case you are receiving dividend. So you have a stock you're with a company, and every 6 months they were paying you 5% on what the stock that you have, every 5% every 6 months. And then a new management came in, they restructured, and they have a new CFO, the new financial officer, who says, you know what, I'm going to stop this dividend payment. I want to move this company to a new level. I want to see a net worth of this amount. They might now cut down or even reduce the dividend coming, which might be a default. So some people will not like that. They are already used to receiving that fund, but now the new CFO cuts that down. That's one, default in payment or complete close of dividends payment in that particular domain. Worst case in the stock market is that a company goes bankrupt. Just like I mentioned, if you want to get into the stock market, you have to be smart. You have to look at companies that have been around forever, companies that are profitable. Which are some of the companies that have been around since you were born, and they will still be around when you're gone? Coca-Cola. It's not rocket science. These are companies that will always be around, and Coca-Cola is one of the companies in the Fortune 500. So you have to look at companies that will always be around, that they will never go bankrupt. Because if a company goes bankrupt, which is the worst case scenario, what happened? An asset management company will start running the company, try to liquidate all their assets. So they will sell some of their stuff, try to recuperate money, and then pay back to the shareholders. So if you happen to get 3/4 of what you invested, then I think you should even be happy. So that's the risk when it comes to the stock market. Also, just to let you know, there are certain TV channels which are very good when it comes to the stock market. If you If you watch Bloomberg TV, it's all about the stock market and investment. CNBC, there is a program called Mad Money by Jim Cramer. They talk a lot about stock. You can also watch Money Talks. And then there is Yahoo Finance, Google Finance. They also talk much about the stock market. So this brings us to the end of this session. I hope you guys find value in this, because this is my stock exchange knowledge that I'm passing over. I wish I knew all this 15 years ago when I started the stock, but I guess I had to learn the hard way. If you find this valuable, please subscribe, share this video, and comment below. I want to know which level you are in the stock market. If you are a beginner, intermediate, or if you are advanced level. I also want to know, what are your strategy? Are you a day trader? Are you a swing trader? Or are you a long-term holding like myself between 3 to 5 years? I would like to know. Until then, I'll talk to you. Have a nice day. Take care. Goodbye. Thanks for watching, and please don't forget to subscribe.